So this is the US dollar Japanese yen analysis for Monday 27th of November. Now, before we get into the analysis, a quick risk disclaimer. Now, with the risk disclaimer out of the way, let's get into the analysis. So we're just going to grab the pen. Now, what we've seen this very strong move. So we've had this move up to the upside on the US dollar Japanese yen, but it's been a continuation of the downwards move. So we weren't able to hold this 112.52. We've had a slow move downwards, and we had a pretty swift breakdown in prices. On the way down, we didn't see much of a reaction around this 1160. We pretty much just traded through the level without much difficulty, really. So we did break down to see 1120 and around this 1120. Didn't quite get to go down to say 11. We've had this consolidation. We've had a break of the move upside, and we retested the 20-period moving average. We've broken up, and we've come to retest this level that was a support and was resistance previously for a couple of weeks, couple of months actually. We've come up to this level now. We do seem to have stalled there somewhat. We've had this very strong bearish candle here on Monday the 27th so far. We are operating in shadow of that bearish candle, of course, and this very strong horizontal level. So what we might see is a retest of 1160. If we're not able to hold it, we're looking for a breakdown towards that 11 level. Now, if we do break down from 11, we've got 1073, which we've identified previously as being the a level of interest. So let's get the scale on there correct now. So if we don't see the retest, or we do get a continuation from this strong bearish candle, we're looking to test this 11, this 111. So it's 111 on the 111 on the US dollar Japanese yen. And if we don't see a reaction there, again, it's not marked on the chart in red. But as is random, we might see a minor reaction around that. But the next level we'll be looking for is a significant level in around this 1073. Around 1073, we'll potentially look for buy side momentum to take us all the way back up to 1160. And if we're not able to hold 1073, again, 110 is going to be the level that we'll be looking at. Where we could potentially see support in around that 110, but below that, the very next level of support is at 109.54. 109.54, then I'd imagine will be the far end of the range on the 27th. If, however, we do see a retracement from where we are, or a strong retracement from 110.73 or 11, we'll be looking for prices to the upside. So potential upside targets from this 1160s, that 112.15, in around the 112.15. We do have the 200-period moving average here marked out in blue. So those two points coupled together, we may see that hold as resistance for a test of that 1160 from the upside, a break down from which we look for that 110.73. If we're successful, if we do successfully navigate the 112.15 and the 200-period moving average, again, we'll be targeting that very strong, very strong level in around this 112.52, above which we've got the next level is pretty close by in around the 12.77 6, and above that we've got 13.04 coupled with the 400-period moving average. Again, we're looking to see more sell side momentum coming to the market. Can't anticipate prices that, let's see where we are. We are 1140, so it's 160 or so pips. Can't anticipate price getting all the way to this 113. The far end, the very far end of the range might be in around this 112.77. To the downside, again, I can't imagine price getting all the way down to 109.54. So I'm just going to have a look at the higher time frames for wrapping up here. So if we go over to the monthly chart first. On the monthly chart, my word, it's rather, there's a degree of indecisiveness here. On the monthly chart, so we've come down from our highs in around at 1860. We've made new lows in around at 107.32 before we had a strong move to the upside, but we have got a bearish month forming so far. Let's just clean this chart up actually. So we've had a bearish month, a pretty strong bearish month so far from sell off from this 104 114.30. So it's a pretty strong month so far. We do look poised to close beneath the low of the previous month, which is not a good sign in terms of if you're alongside biased. So we'll definitely be looking to target the lower levels as well, possibly taking us all the way back down to this 107.32, which is the lower end of this range down here. So if we do see a strong sell-off and we do see strong continuation, we'll be targeting the previous lows from this candle of September. overall. We did seem to catch up a bit of a bid, so this might just be a retracement. Even it might be a deep retracement, possibly all the way down to this 109.54 before we potentially see more buy side momentum take us all the way back up to this 114.30. So we might turn around at 109.54 before we get down to 107.32. So let's just have a look at the other time frame. So we're going to go down to the weekly time frame. Just bear with me a second here. So if we go over to the weekly time frame, you can see here. So we've got our highs around at 1861, and we have been in a bit of a trading range, as can be seen here on the US dollar Japanese yen. Upper end of the range more recently has been around this 114.30, and we have seen some sell-offs from this 114.30. We've been quite indecisive with our lows because we have not made lower. We've not always made lower lows. So we've had a low over here, we've had a higher low there, but we've made a lower low over here before we had a strong continuation up to that 14.30, and we do look poised for more downside momentum. Let's just get the clean chart up. So we do have they do appear to be somewhat strong candles closing near their lows. They're pretty sizable as well, suggesting that it may not be a reversal. Well, a small retracement. Instead, it's possibly a reversal or a deep retracement. So we are looking for the levels beneath where we might potentially see some buy side momentum. We're just going to have a look at the daily chart before wrapping up here. So on this daily chart, let's get the scaling on here correct, and there we go. So let's just grab the pen. So on this daily chart, again, we've seen the 114.30 hold. We have seen selling continuation, and we do look poised for more selling continuation at present. Now we have come up to let's just clean this chart up one more time. So we have come down. We've had a very strong candle there, and we do seem to have a bit of a retracement. Now we have got the 200. Sorry about this. We do have the 200 period moving average, and we do seem to have had a negative reaction of the 200 period moving average here on the daily time frame. Now we do have a bullish candle previous to today's candle, closing pretty close to its highs. So we have to see how these prices play out. If we do see another retest of 1160 and the 200 period moving average, or if we do break down, negate the bullishness of this candle, negate the bullishness of this candle and these lows to retest all the way down to 110.73. Further continuation possibly down to 109.54, but we do have the 400 period moving average down there as well. So that should wrap us all up. Let's just have a look at 200 period moving average again. I suppose we can all look for ourselves as on our different charting packages. So I'm just gonna have a look. Where is my there we are. 200 period moving average sitting around at 1170, so it's pretty close to this, 10 pips above the 1160 zone really. So those are levels that we're looking at to the downside, although we do accept upside momentum to be somewhat limited. But this very strong bearish candle might just be a blow off candle, so we might see a deeper retracement, possibly all the way up to that in and around these zones there, in and around that's 112.15. We might see a deep retracement after having such a strong candle at the end of a trend to the downside. Usually sometimes it's a bit of a blow off move. So we have a trend, we have a large candle at the end of the trend, well, at some point in near what you'd think would be the end of the trend, and we see some retracements, see quite a deep retracement before possible continuation. So a deep retracement for possible continuation down towards our targets down the bottom end of the range. So that should wrap up the US dollar Japanese yen analysis. Thanks for watching.